getting my name out there was just being able to connect with the people on the podcast, the guests that I was having on. And for me, when I was first starting out and being able to interview these very successful people, if I went to them and asked if I could have 30 minutes of their time, they would most likely say no. But if I say, hey, can I have you come on my podcast? I'd love to interview you, they're more apt to say yes. And now is a huge learning curve for me. So now I really get to dissect the ins and outs of their business from my perspective, and almost like a free mastermind, free mentorship, being able to interview these very successful people.
Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder, and CEO of Zana Investments, Tim Little. And on today's show, we have with us Trevor Oldham. Trevor is the founder and CEO of Podcasting You, the leading podcast booking agency for real estate investors. Trevor has worked with a variety of real estate professionals to help raise capital, generating more exposure and increase their networking opportunities. Trevor, welcome to the show.
Tim, thank you. Excited to be here and excited to chat with you today.
Yeah, me too. So I'm relatively new to the podcasting game. So it's exciting for me to have you on here as an expert insider. I gave everyone a high level overview of your background, but on this show, we really like to get into the details of how you got started. So please take us back to the beginning and tell us how you got to where you are today.
Yeah, most certainly. And really the story starts about 8 years ago. And what happened 8 years ago, at that time, I was running a separate company that I'm running now. And it was with that company that I thought it'd be really cool to go out there and start my own podcast. So started my own podcast, booked my own guests. And really some of the guests that I was able to interview would be like David Osborne and Jay Papperzan, very successful people with Keller Williams. And was running that podcast for about 2 years and just really doing everything on my own. And really, long story short, after running that company for about 2 years, realized I just wasn't passionate about it. I just felt really burnt out of running that company. And I was with a partner at the time. So we basically split the company up and went our separate ways. And it was, what am I going to do next? What are the next skills or next opportunities that I'm going to have? And really, what I started to do was just start freelancing the skills that I had learned. So I used a platform called Upwork, and I went on there and just really applied to every podcasting job I could find, whether that was editing, whether that was writing show notes, whether that was booking guests. So did that for about 6 months, and again, worked in a variety of roles within the podcasting. And then one day I ended up finding a job opportunity, and it was a turnkey real estate investor based out of Los Angeles. And she wanted to go out there and get booked on podcasts. And I thought to myself, well, I booked all these really good quality guests on my podcast. How hard could that be to get her booked on podcasts? Started working with her, started picking up more clients, really just freelance clients, didn't even have a website or anything like that. I think it took about 2 years for me to even hire my first employee, and it was just picking up freelance clients, and they were all over the map. Outside of real estate, there's business and doctors and lawyers and business coaches and the medical field. And I was all over the map. Really, it was at a point in time where I would take any client that I could. And after doing that for about 3 years, I felt as though I was just really spreading myself thin. There's so much work that goes into the company and booking a guest on a podcast. So and a client that wants to go on a podcast, say in the medical field or the business field, or they're very specialized. It's a ton of work to do. I was like, why don't I just become a specialist in just one specific niche? And I was like, who do I like working with the most? What do I have the most interest in? And that ended up being real estate investing. So really for the last 3 years or so, I've been going all into that, and it's been a phenomenal journey, and I'm glad I did. I thought it was a little risky specializing in one specific niche, but obviously within real estate, everyone knows there's tons of niches just within the one space.
Yeah, and I think that's the tricky part for almost like any entrepreneur really is everyone tells you got to niche down. You got to niche down. The riches are in the niches, all these like cliche things. And that's scary when you're starting out because you feel like you're relying on growing that customer base. And you're like, no, I don't want to leave anyone out. Well, I have to make the pool as big as possible. And everyone's telling you, no, you need to niche down and get as specific as possible on whatever your ideal customer avatar is, whatever the case may be. So it's that really pull and tug in the two different directions that even within real estate, I find myself being pulled in both directions. I want to be able to provide these opportunities to as many people as possible, but I know that I'm likely going to resonate more with that niche group that identifies with me.
Yeah, most certainly. And that was like the toughest thing when running it was when a potential client would want to come to us and want to pay the company. And I was like, I want to work with you, but it's just not my specialty. And that was the hardest thing, was just learning to say no to those clients. And then 9 times out of 10, if I ended up working with those clients, it was outside my realm of expertise. And there would just be a situation where we don't do a good job or we end up having to refund the client. And it just ends up turning into so much more work than if you just specialized in that one niche and really just stayed in your own lane.
Yeah, and I think that goes to the other side of the point, which is the more specialized you are in something, the better service you can provide those customers that you do have. It's that whole being a jack of all trades versus the master of one. If you're able to provide that specialized service to that small group of customers, then that level of service you're providing will be much greater than if you tried to just serve.
Exactly. And you can even look in the real estate space as itself for folks that are going out there and raising capital. Sometimes I see folks out there that are raising capital only for pilots, and then folks that are only raising capital for folks that have been in the tech industry. So even that sort of space, even those folks that are raising capital, you can even specialize even there, or you're not just accepting any sort of accredited investor. They have to have a background that you're familiar with or a background that you like. So you can get very specific there as well.
Yeah, and I'm finding that with myself as well, trying to hone in on basically military veterans, right? Because they can identify with me. I am a military veteran. I've been in for a while and did active duty for a while, but then got out, went into the civilian sector. And that's where a lot of like my peers find themselves. Maybe they did 20 years in the military, got that nice retirement check, which is great, but now they're moving on to that second career in the private sector, and they have some extra money, or they've accumulated two or three single family properties from moving every couple of years, and they want to find a better, less stressful way to grow their wealth. And so that's where I come in and I provide a solution for them. No, you don't have to be a property manager over three single family buildings. You can do this. And it's because they understand that I know where they're coming from. Like I said, it's that whole being able to relate and resonate more with your customers.
Yeah, most certainly.
Yeah. So I think a big argument going on right now with the podcasting community, or those outside it more accurately, is hey, podcasting was the new thing for a little while, but now everybody has a podcast. And if you look at it, it seems like there's a podcast for everything. And so I think a lot of people who are thinking about starting a podcast look at it and just get overwhelmed. They're like, there's way too many podcasters out there. I see 200 podcasts about real estate, and 50 of those are about multifamily. How could I possibly get my voice heard in that arena? So, I'm curious on your thoughts. Do you think that the podcasting, I guess, realm is oversaturated, or do you still think there's plenty of room for anyone who wants to go out there?
I would say that there's definitely still plenty of room for those folks that want to go out there and potentially start their own podcast. And I would say to those individuals that, like you mentioned, there's a ton of podcasts that are out there, like the new hot thing in the last couple of years of people starting a podcast. With that said, what can you do to make your podcast stand above the rest, or even better than the ones that are starting up every day? And it's one, having a good quality, being consistent with your content. If you're going to be having a podcast, make sure if you're doing a weekly episode or you're doing bi-weekly, whatever your cadence may be, make sure that you stick to that. Make sure you're promoting your show. Make sure it's conversational with the guests that you have coming on. Make sure you're not overly promotional, and just different things like that are really going to allow you to stand out. And I find that people that are starting a podcast that don't have as much success, one, they expect to see results right away, where it can really take 6 months to a year, even 2 years of having a podcast before you really see anything. And then two, I would say they're just very inconsistent. They like the idea of starting a podcast, they start it, but they don't have a backfill. And for those listening, a backfill is basically pre-recorded episodes with other guests. So you don't necessarily have to record an episode today and put it out tomorrow. You have a couple of weeks bandwidth just in case something comes up in your life, and you know that even if you don't record an episode this week, you're still going to have episodes to produce or put out. So that's a big thing that goes with it. And then I would also say the biggest benefit that I found starting my own podcast, and more than getting my name out there, was just being able to connect with the people on the podcast, the guests that I was having on. And for me, when I was first starting out and being able to interview these very successful people, if I went to them and asked if I could have 30 minutes of their time, they would most likely say no. But if I say, hey, can I have you come on my podcast? I'd love to interview you. They're more apt to say yes. And now is a huge learning curve for me. So now I really get to dissect the ins and outs of their business from my perspective, and almost like a free mastermind, free mentorship, being able to interview these very successful people. I think just from a personal standpoint is being able to talk to people that are even a few levels above you or even super successful, and you start to learn their habits and traits and how they built their business, especially when you're starting out. That was very good for me. And I would definitely recommend that aspect of it too. Like, even if you don't see that success in a year, you could imagine if, let's say, you interview 52 guests in a year and you spend 30 minutes to an hour with them, that's so much more knowledge that you can learn from them than you going out and doing all that work on your own end.
Yeah, and there's some really key points that you just put in there, and so I'll hit them one by one. So, the don't expect results right away. I think there's a stat out there, and you probably have this committed to memory. It's most podcasters don't get past episode 8 or something like that. And I think part of that is because of the consistency that you talked about that's required. It's not easy, especially if you're doing it yourself. I speak from experience. When I was editing those myself, and the recording and everything, it just took a lot of time. So it is a big commitment if you intend on keeping with it. So there's a consistency and people just fall off, just like a New Year's resolution or something like that. But I think the other piece is more psychological. It's that expecting results and seeing you got 4 downloads of your podcast. And then everybody talks about Joe Rogan and seeing he got 50,000 downloads that day. It's like you cannot compare yourself to someone who has been doing this for years and has built that audience over those numbers of years and just really expect to blow up like that. It's just not the way this works. I think podcasting, starting your own podcast is a slow build, right? But you're planning for the long term payoff in the end with regards to potentially having more exposure, more customers, investors, whatever the case may be. And then the other piece that I thought was really important that you talked about is the value that you gain by being the interviewer. I've talked to some folks who started podcasts and they said, even if they didn't get any customers or investors from that podcast, they would still do it all over again because of the value that they derived from the guests that they've had on their show. Like you talked about, it's basically free coaching when you interview these people that are 1, 2, 3 steps ahead of where you are. And you probably wouldn't have the opportunity to get that time from them had you not had that platform.
Yeah, exactly.
Yeah. And so I just want to get across to people if you're thinking about it, it is a commitment. I'm not going to say it's not, but you have to come into it with this long term thought process, not a get downloads quickly kind of mentality, because it just usually doesn't happen like that, right? This is not doc. You're not going to go podcast viral all of a sudden, if that's even a thing. Don't know. All right. So some people run their own podcasts while others do appearances. And then, of course, some people do both. I'm curious to know what are the benefits and the drawbacks of each of those approaches?
Yep, and that's a great question. And I find that one is the time commitment. So when you're going out there and being a podcast guest, say for someone like myself being interviewed by you today, I show up for the interview, say it's 30, 45 minutes. I hop off, that's the end of it. As the podcast host, you typically have to prepare beforehand, make sure everything's set up, and then you have to produce the podcast, whether you're outsourcing it or whether you're doing it yourself. There's that time commitment to it. But the nice part about being a podcast host is that you control the conversation where a certain degree, Tim, I'm beholden to the questions that you ask me. So when you're the host, you're more in control of the conversation per se. And what I typically recommend is if it's someone that's a little bit newer to the space, say they haven't raised any capital or they just have, let's say, a duplex under their belt, it's probably going to make more sense for you to start your own podcast where you want to have a reasoning for going on other people's podcasts. So typical client that we get is someone that's looking to raise capital. It's someone that's going to be more experienced. They have about 5 years of experience in the real estate. Someone that is just looking to get a shot of injection of marketing into their real estate company. Where if it's someone that just wants to go on podcast just because they want to, you could definitely do that. But I don't think it would be the best use of your time. I think the better use of your time would be going out there and starting your own podcast. That's typically what I recommend when someone comes to us and they're saying, "Hey, should I start my own podcast or should I be a guest?" It really just boils down to your experience, because a lot of the times if you're super new into this space, and there are a couple of podcasts out there, there's one, Bigger Pockets Real Estate Rookie, that someone could target. That I think they interview people that was under, I believe it's under 10 units, could be even under 4 units. So definitely someone that's a little bit newer. But for a lot of these podcasts, so there's a lot of people that want to go out there and get booked on podcasts. So that's who you're competing against. And you got to think to yourself, if I'm going on these podcasts and I'm say going on a very well-known show, it's going to be hard for me to compete to be on there if I don't have as much experience to go on there. So typically that's what I would recommend someone to go out there and start their own podcast. And then once they start to build up their portfolio and they can hold again, a 30, 45 minute conversation, then it's worth having them as a guest. And then conversely, if you want to go out there and be a podcast guest yourself, then you want to have that real estate experience where you can hold that 30 to 45 minute conversation.
Yeah, and that makes a lot of sense. Guess one of the things that I consider, I guess, the difference between the two. So I think about going on as a guest as an opportunity to get say, a quick bump in exposure or to leverage someone else's viewing or listening audience. Whereas, like I said, hosting your own podcast is more that slow grind. And hopefully after a while, people start to see you as an expert by association, right? Because of the company that you're keeping in your guests.
Yeah, I couldn't agree more with that. And again, like you mentioned, like exposure, couldn't agree more with that. If someone's looking to say they have a marketing, let's say they have a conference they're putting together and you want to attract more people to it, your best bet's going to be to go on other people's podcasts. You can use exposure to their audience. Whereas you want to build that long-term play and build up your own audience, and then that's where it comes in handy of starting your own shows.
Yeah, exactly. Like a conference, or say you have a new lead magnet that you want
Mhm.
people to download, you can certainly plug it when you're a guest on someone else's show. Yeah, I think that does make a lot of sense. And that's why for many of us, it makes sense to do both if you have the time and desire, right? Not everybody wants to do a podcast. I found that I enjoy it more than I expected to. So that's a plus because no one's going to stick with it if they don't like it. So another question that I had that kind of relates to that is you talked about kind of high profile guests. When you're starting out as a podcaster, I think it's safe to say you're probably not going to make a phone call and get Greg Cardone on your show for episode number 3 or something like that. Can you talk a little bit about how, once you are a little more established, you can increase the likelihood of getting those higher profile guests? And do you think it's worth the effort? Because I've heard some differing opinions on the bump that you get from having these high profile guests and whether it's even worth the effort.
Yeah, that's another excellent question. So I'd say one, it definitely helps out your show. And the reason I say this is, let's say you go out and get, let's say, Grant Cardone on your show. So you get Grant Cardone. And then when you want to leverage his name to say, hey, I want to reach out to another profile guest, let's say if it's like Robert Kiyosaki, you'd say, hey, Robert, I recently had Grant Cardone on my show. He's going to obviously recognize that name. So it's worthy of that. I find the only problem I see with folks that are interviewing these I guess you would call them influencers. That's why I look at like Grant Cardone with a massive following, is a lot of the times they're telling the same story on your podcast as they're telling it on the next podcast. So a lot of times I think it can be almost like regurgitated. And I find that for me, like when I'm listening to the even bigger name podcasts out there, it's like the same guest on the same podcast, just a different name with the same exact story. So it's not that too much different. So if you are bringing that, let's say again, like that Grant Cardone or that Robert Kiyosaki on your podcast, you want to make sure that when you're interviewing him, you're not asking just like a standard sort of question, because those guys are probably interviewed tens of thousands of times on different podcasts. So you want to make it worth your while. So there is that added benefit for it. So I would definitely say to reach out to those folks and try to get them on your podcast. You would probably want to wait as a host, probably about 50 or so episodes. Just they want to make sure that you're well established. And this isn't to say that you couldn't get them on. When I was starting on my podcast, I was 18 years old starting it, and I would leverage my age, saying like, hey, I'm an 18-year-old entrepreneur starting this podcast. I'd love to have you on. And that's how I got some of the bigger names. And that podcast didn't even have 10 episodes when I was landing some of these bigger names that I had. And I was just using that sort of leverage. So if you're a younger listener out there, I recommend doing something like that. But if you're a little bit older, then I'd recommend, again, getting to about the 50 or so episodes so they can check it out and understand everything that's going on with the show.
And what about paying for higher profile guests? I've heard, and I think it was Travis Chapman or something like that. I think he provides a service, and others provide a service where you basically pay for these higher profile guests, just like you would for a speaking engagement, although not as expensive, presumably, for a podcast episode. So what can you tell us about that? And is that something you offer or that you've considered? Don't know much about it.
Yeah, no, that's an excellent question. It's something I would consider, but it has to be for the right price. And what I mean by this is it's say if it's like Grant Cardone for say $500 to $1,000, that would be my within my realm of reason. But I have to understand, okay, if I'm having them, I probably want to have them on for 30 to 45 minutes. And then how many pieces of content can I produce out there? I want to make sure I'm making it worth my while. Where I've seen folks, they charge 10K to come onto a podcast. That just seems like too much money to me. That's just a boatload of money, and I don't care how successful my podcast is. That'd be hard for me to just personally swallow. I think that there's just so many good quality guests out there that would be willing to come on to your for no charge at all. But again, I do see the value in having someone like Grant or Robert Kiyosaki, but I wouldn't just spend the dollars just to have them to come on to your show. And again, if you are having them come on to your show, you probably want to make sure that your show has some sort of listenership. It's going to be tough at the end of the day. You spend, let's say, a grand on Grant Cardone and you have 20 listeners. It's probably not going to be the best use of your time. Or you'd probably be better spending that $1,000 on podcast ads or Facebook ads trying to promote your podcast. So you just have to weigh the pros and cons. And is it really worth it to you to have a high influencer guest like that on your show?
Okay. No, that makes sense. Again, going back to the whole return on investment piece. And much in that same vein, you talked about, do you consider ads to be an effective or the most effective way to quickly grow your podcast? There's been a couple of different ways that I've seen you can do it. You talked about book ads and other platforms as well, doing that type of ad. I've also done ads directly with the podcast platforms where they'll play the ad for your podcast on other people's podcasts so they can monetize it. What are your thoughts on ads in general in order to grow your listener base?
Yeah, I've seen folks do that, and I think it's more of a slow and steady growth of them doing that. I find the way that works best is more the organic growth. And what I mean by this is optimizing your episode titles for SEO, making sure that you take your episode that you do and creating multiple forms of content from it, and then even leveraging your guests network. Where let's say we do an interview together today, Tim, and you give me a piece of content, I go out there, I put it on my LinkedIn, and then people look at that interview, you interviewing me, they get interested in the show, then they go and check you out. So you can really leverage the guests and the guests' audience as well. And that's typically what I find moves the needle quicker, but especially the SEO aspect of it and making sure that you have the keywords right for your episode. Because let's say someone types in a keyword, I don't know, let's say how I got started in real estate investing or how to get started in real estate investing in 2023. That's the name of your episode. You brought on a guest. You talked about investing in real estate in 2023. It's the first article up there, first link on Google. And people are going to start to listen to the episode that way. And I typically find that works a little bit better than these podcast ads. Is I find that sometimes with these ads, you might see a spike in your show. Let's say, for example, you have 100 listeners and you spend $100 in ads, you might get up to 125 listeners now, but they just listen to that one specific episode. Then you got to dig back into the well and promote it for the next show. So it's harder to build long-term consistency there. We're building it more that organic way. It is slower. It's not the most exciting way, but done right, it can be really impactful for you.
Yeah, and there's obviously some things I could be doing better myself. One, sometimes, or I used to just have a guest on and then hope that they would promote it. But I think, yeah, you have to have that conversation, be like, hey, here's all the things for you. Just go ahead and do it. Post it everywhere. And then another piece to that is maybe posting like your own mid-roll ads right in the middle of a 30 to 40-minute podcast. You break it up with an ad that's an ad for liking and subscribing, because I think, or leaving a review, because I think that's another thing we haven't talked about yet, how much of an impact the reviews for a podcast have. Because if you're not proactive in asking people to leave a review, then it's only going to happen like any review when people are really mad or really happy. Hopefully it's the latter, but that means you're just not going to have that many reviews unless you're proactively going out there and asking for them.
Yeah, I think that's a good thing to talk about. And it's something that's interesting to me. So reviews are obviously, I sometimes they can be seen as the gold standard. The more reviews you have, the more people assume that are going to be listening to your podcast. And it's one of those things you could talk to your audience all the time and ask them to leave a review, but it's hard to get them to do that at times. So maybe sometimes you can incentivize them, say, hey, leave a review, you'll be entered to win a free 1 hour coaching session with me, just something like that. But it's also interesting from my perspective where I've seen it's almost, I don't know how it's done. But I see podcasts out there that launch and all of a sudden they have 500, 600 reviews the next day. And I start to wonder, are those reviews genuine. And I can say this just from my experience and working on different podcasts on my end. I've seen a shows with 1,000 reviews, and I don't know how they got them before I took over and helped them out. And they get 50 listeners an episode. But you see 1,000 reviews on iTunes, you're going to think that podcast is very good. And I've seen podcasts I've worked on that have 25 reviews and they get 5,000 listeners an episode. So it's hard to tell. I think that sometimes people, it's almost like they're gaming the system. They can buy these reviews, which I would
Mm.
definitely not recommend. But at the end of the day, you definitely want to have some reviews for your podcast. Again, it's a slow and steady sort of process. I typically tell people the hardest are the first sort of 10 or so reviews. And then if you can continue to build it up from there, especially when you're starting your own podcast, you can have your friends and family leave a review at least to get some traction right there out of the way. But again, it's been an interesting metric that I've seen. I feel like people are just gaming the system to a certain degree, and I don't know exactly how it's, but it is interesting. So if you see a podcast, you can't take those reviews all into account, and if you want to, I would say take a look at it and see when all those reviews were left. Were they left all within the 1 week time frame, or were they spread out over a 6 month period? You just want to check that out and see what's going on there.
You're right. Yeah, it's just one consideration on whether someone's going to listen to your podcast. Because I just think about how I'll go through it. I probably won't check the reviews, but I know if people are listening in iTunes or Apple Podcasts, whatever we're calling it, they may look at reviews. But I think the larger consideration is they're really just looking at the titles, like you said, of the episodes and saying, oh, that sounds interesting. And maybe they'll listen to that one episode that they think it's the topic that they want to focus on that day. And then if they like it, they'll be like, all right, he's pretty good. And then they'll subscribe. And that's how I approach it anyway. So I assume everyone's just like,
Yeah, and I can say I can even be guilty. There's certain podcasts I've listened to for 3 years. I've never gone in and left a review. And not, now that I think about it, I feel like I should do it after we hop off the call today. But yeah, that's the type of thing I think it can be hard to get people to leave reviews. So that's again, like you mentioned, really optimizing those keywords on the episodes. I think that's what really people look at more so than the reviews. And
yeah. All right. And so it sounds like besides helping real estate investors grow their own business, you've seen the benefits passively investing in real estate can provide as well. Can you talk about some of your passive investments and how you got into those?
yeah, most certainly. So this was a question I was actually challenged by my business coach. And he's like, you're working with all these real estate investors all the time. Why don't you invest in real estate? I was like, well, I don't want to go out and own any property. I don't want to deal with tenants. I'm busy enough as it is in my business. So honestly, what I did is I started attending a couple of different networking groups. And that was more so just for me to network with people and get my business out there a little bit more. And it was through those networking groups that I learned about the passive investing space, investing in syndication. So this was back really in August. And I remember I met this gentleman in one of these networking groups and I had an hour phone call with him, very generous of his time. And he was telling me about the different passive investments that he had made. And he'd been doing it about a year and a half. So he was about one or two steps ahead of me. And again, I thought to myself, I don't know if that's something that I could do. I just don't know that much what I don't know about it. And then he called me out on that. He's like, I don't care. I challenge you to make your first investment in a year. So I was like, okay, I don't want to let this guy down. He's going to be pushing me. So long story short, just started interviewing sponsors, wanted bigger pockets, started listening to more passive real estate investing podcasts. And then what really turned the tide for me is I joined a community called the Left Field Investor Community. And I ended up meeting up with a couple of those folks in Boston. And basically, the community is just made up of folks that are looking to passively invest in real estate, and being able to meet with some of those folks from that group in person and understand
Mhm.
their stories and why they're investing. It just made it more powerful. So I was like, I got to get into this. So I made an investment in a mortgage note fund just for the standard monthly distribution. That was sort of ripping off the band-aid, invested in that. And then the next month I invested more heavily into a triple net lease fund. But the reason I invested in those was if I'm going to be investing in real estate, I want to make sure the first investment is stable, safe, secure. The triple net lease, corporate AAA rated tenants, your Dollar General, Family Dollar, like that, monthly distributions, 5 to 7 year leases. So I like that one. Been doing that for received distributions for about 3 months on that. Realized I wanted to go in a little bit different direction. That's more of a cash flow play, wanted to go more equity play. And I ended up wanting to go into self storage. So I ended up investing in a self storage deal actually last week, wired the funds over. So that's a really good self storage opportunity, a development deal where basically they have about 2 acres of undeveloped land on top of the unit. So they're going to basically go in and develop more units. So I like that. And then really my next sort of step is to invest into multifamily. And I'm a part of as mentioned, that left field investor community, basically have a tribe, what we call through that. So there's a tribe of about 10 of us. So we're each going to be putting in about 10K this year, and we're going to be splitting it up between two different multifamily deals. So you can imagine 50K in one, 50K and the other. And that's why I haven't invested in multifamily on my own, just because I know I'm part of that group. And I just want to, I don't know which asset class I'm going to love the most. I just want to diversify and test them out and learn. But yeah, it's been good. I think another aspect of that for me too was I just got to a point in my business. I was like, I don't want to be doing this forever. And I had my money in the 401k, and I know I can't touch that till I'm about 60. I was like, I don't want to be doing this for another 30 years or so. What can I do now to start generating monthly passive income? I say that with a grain of salt. You still got to do a ton of research and talk to folks. And for me coming in, I was non-accredited. So it's not as easy as just finding a deal out there where it's being advertised. You have to have those pre-established relationships, which meant a lot of phone calls with a lot of different sponsors to establish those relationships and realize that what I would need about $4 million to retire. That was always my goal. When you're talking, say, 4% withdrawal, 160K a year, I realized that I can probably get it with about half that amount invested in real estate, depending on the preferred return and the distribution schedule and different things like that. And that really blew my mind. And that's why, I want to continue to put money into the space.
No, that's awesome because you hit on so many different aspects there. I think the first one was just getting over some of the limiting beliefs that a lot of people have about getting into it. First of all, they don't know it's an option, right? That's what I talk about. It's like this curtain, and someone like opens up the curtain and they're like, wait, there's something other than the S&P 500. I don't have to put my money in stocks. And so once that curtain is lifted, you just get exposed to so many more aspects of it. And real estate isn't just houses, which is what most people think of, but you find out that yeah, there's self-storage, there's RV parks, there's multifamily, there's a warehouse. All of these and all of the different assets have different attributes that in some of those that you discussed. So for people with different risk appetite, I'll say they may come in exactly like you did and say, hey, this is the lowest risk, but it's an entree into real estate. And then you moved up a little bit into hard assets going into the triple net lease. It's still a real building, still something you can see and touch, which I think is the best part of it. But like you said, it's very reliable, very low risk. There's a level of consistency, I think, there. And so that gives you the confidence as an investor to say, let me see what else is out there and where I can maybe incur a little bit more risk for a little bit more reward. Then not only that, but you started talking about veering off into multifamily. And again, none of these is right or wrong. They just have different attributes that fit different investors. And obviously, I love multifamily, hence the name of my podcast. But I recognize that there's benefits to the different asset classes. I just think with multifamily specifically, those limiting beliefs are that much more prevalent because realistically speaking, some of them have that barrier to entry of 50,000, 100,000. And so people just shut down and say, oh, that's not for me then. Obviously, I can't do that. But the point is, you found a way even then to get into it. And once you get into a deal, that's when you start learning because how do we learn best by doing? So I think that's so awesome that you were able to find a group, learn from like-minded people, and then find a way to invest, even if you didn't have 50,000 sitting around.
Yep. And I couldn't agree more. And I would say, even for myself and what I had done with this initial self-storage development opportunity, I don't want to put in more. So the minimum was 50. I wanted to put in 25K. And that's just what I felt comfortable with the first time investment into this deal. So I asked of them, hey, can I put 25K? This was back in September. And they said, no, we're still adding on additional investment. They didn't say much like that, but they just said our minimum is 50K. So they stood flat at that. And then the fund is closing, I want to say on Monday. And then that's when I emailed them. I said, hey, can I put in 25K into this deal? I really liked it back then. I just don't. And the part of the reason I don't want to put in 50K is I didn't want to put in more than 20% of 20% of my assets into, I don't want to put like 50% into one deal. I wanted to stick with about 20% to get no more exposure to any one sponsor. So that's why I wanted to stay around that 25K mark. And then eventually they were like, yeah, sure, come on in. I didn't even think twice about it this time around. And I was like, oh, this ended up working out. So that is something to consider for those folks out there. I know if I invest with them again, I'm not going to put in 25K or put 50K and hit their minimum, but you are able to ask that question out there, especially if you're investing with a sponsor and say their deal is closing, sometimes they might need 100K more to close that deal, and you could come in with that 25K to get them started, and that's perfectly fine. Again, I wouldn't always recommend it. I don't want to do that to everyone, but just for my personal preference, that was where I was at with them.
Yeah, no, and some people, it takes them a little while to learn that. That's a pro tip right there. Because we as sponsors, we try to limit, the number of passive investors that we have, not because we don't want to serve as many people as possible, but there's a cost both in time and money associated with dealing with all those investors. So that's why if you can get more, that's better. But you're right. When you're coming down to the end of that raise, and if it's for non-accredited investors, if there's still slots available and you want to get in, it certainly doesn't hurt to ask the question. And that's when they're most likely to go ahead and say, "Oh, yeah, we're at the end of the raise. We can go ahead and get you in for that 25,000 number." So that's a really good tip, especially for those first time investors who are listening out there. Because first of all, you're right. They shouldn't be putting more than a certain percentage of their overall investable income into a deal. And then what you talked about, I think, was basically the diversification of sponsors.
Yep.
So you want to diversify by assets, you want to diversify by sponsors. Although, unless you're investing with me, then everyone just stick with me for the rest of your investing career. But right, because all of that is going to reduce your risk to some extent. Right. So those are really good points that I hope people paid attention to. All right. With that, we do need to move on to the turbo round. All right. So I'm going to ask you 3 questions in quick succession, and I need your honest. The first one: what is one red flag every investor should look out for?
And the red flag I would say for me in talking to different sponsors is taking a look at the numbers that they're sending over. And the reason I say that, and that was just a red flag I encountered earlier this week, was talking to a sponsor, and he was telling me about how they got a 350% return on a deal. I don't know if that's possible. Could be, certainly will be possible. And he was telling me the IRR in his deals are 35%. That also scares me. And that could have been during the uptick when the market, when everything was just, you buy it today and you sell it 6 months for double. And when the market was at its peak, that was a red flag for me, just something that was scary. And what I mean from my end, typically I'm finding about 14, 15 to 20% IRR is standard. Someone tells me I can almost get double that. When I've talked to 30, 40 sponsors at this point, I'm seeing the same numbers. I don't know if they're very good at what they do, but that was just a red flag to me. And that was something that caught my attention that I just didn't feel comfortable. And part of me is just from talking to the people in the investment group that I'm part of. This one individual ended up investing in an oil and gas deal, ended up being a Ponzi scheme. So when I heard that, I want to be very careful of who I'm investing with. And that's not to say that guy invested in 15 other deals, and 15 out of the 16 sponsors are good, and he's gotten a good return on those. But when I hear those numbers like that, not to say that's what's going on, but it just scares me a little bit. You can put your money in that, and that could be phenomenal for you. But for me as an investor, that just scared me a little bit when I heard that number. I just was like, is that real? Is that? It very well could be, but that was just a red flag that I even encountered earlier this week.
Yeah, and I think that all comes down to that. If it sounds too good to be true, it probably is. So it just warrants extra scrutiny for sure.
Yep.
There were some crazy returns during COVID. We had deals go full cycle in 18 months, which is just bananas. But those are anomalies, right? Not the norm, and you certainly shouldn't expect that to continue in the long. All right, second question: what is a myth about this business that you would like to set straight?
Yeah, I would say that the people that investing in the space, I would say probably that you need a ton of money to get started. Really, for me, just to invest in those mortgage notes, I think they just raised the minimum. It was like $2,500 to invest with it. And now it's just rip off the Band-Aid, throw some money in there, and just see how it goes. He accepts non-accredited and accredited investors for it. So just even something small like that. And then like you could start a tribe like I'm doing with these few individuals, and not to say you have to put in 10K, but you could put in say 5K. But you could find even more people. You could find 15 people and you put in 3 to 4K each, and then you can test it out. There's people in the group that are doing just that. They've never got invested into a deal on their own, and we're just doing it together as a group because they don't have as much investable assets, and that's perfectly fine. So you don't need a ton of money to necessarily get invested in the space. But yeah, there's going to be deals at minimum 100K, 200K. I came across a deal the minimum was $1 million. That blew me out of the water. But nonetheless, you could definitely invest. If you don't have that 25K, you could definitely invest for 5K. Probably I would stick around that 5K mark, but it is doable, whether investing in the mortgage note fund, something like I did, or pulling your money with a couple of other people to invest in it.
Yeah, absolutely. Just finding a way to get started because the longer you wait, time is your biggest enemy, but it can also be your best friend, depending on how soon you get started, right? Because the biggest benefits come to how long you get to do this. And the longer you wait, that's just more profit basically that you're missing out on. So even if you get started small, just get started. All right. And the final question, what does success look like to you?
Yeah, success for me, really just being there for my family and just showing up. And even something I've had to work on where when I'm sitting there with my wife and we're having a conversation, not just thinking about work and what I can do to grow the business, just being fully present. And that's something that I have to work on again myself. And that's really what success means for me is just being fully present throughout my entire life. When I'm on a client call, when I'm in an interview where, my wife's talking to me and I'm not thinking about the next deal I'm investing in, just being fully present in the moment at all times. That's really what I see as as a good success.
Yeah, absolutely. All right. Hey, Trevor, this has been amazing. Please tell our guests how they can get a hold of you and if you have anything else that you would like to share with.
That sounds perfect. So you can feel free to go to our website, podcastingyou.com. That's just podcastingyou.com. Or if they just want to connect with me and message me and just have a chat, whether just about investing as an LP or even about real estate or a podcasting space, anything like that, I'm happy to help. And they can just go to my LinkedIn and that's just going to be my name, Trevor Oldham, and they can find me there.
Okay, great. We will definitely have all that information in the show notes. I do appreciate you coming on, and I look forward to continuing to see you do big things on your journey to multifamily millions.